Okay, everyone, welcome. We're going to get into the stock charts. We're going to look at a couple things that are kind of moving and interesting. So I'm going to point those out, give you guys some trade ideas around those, and then we'll look at the indices. We'll start off here with the NASDAQ futures. You can see here, really, I don't see much. I see this broken trend line right here that we just broke not too long ago, and we're having a kickback rally within what looks to be a small downtrend. I don't know how long the downtrend's going to last. So we'll move on. ES futures. So this is the one thing I was waiting for on the futures, was a break of the SPY futures, or ES, and we broke that yesterday at the close. It's not impulsively selling off. It's just kind of hanging out down there. So again, I don't have a clean read on where the SPY is going to be going in the near term future, at least the futures. Let's look at the triple Qs. So triple Qs, we broke this resistance, right, or this support, which was 291.90. Broke it, and it's kind of impulsive. We're getting a little bit of a kickback. So I think there could be some more downside, probably down to about, I've got this level at 287.70. Could be right about there. We'll just call it 287. And so we could easily, reject up here and then sell off down towards 287. That's the nearest support. So again, we'll watch for that. SPY, the top of this channel right here, right around 350.50, is what I see as the nearest support. So I would look for that to potentially hold, and if it breaks and we fail, then we've got a false breakout on our hands. So again, just to give you the bigger picture, this is the big sideways range that the market's been in for quite a while. There hasn't been much really to trade. I mean, not from a swing trading perspective, but you can see here we did break out to the upside. And so what I would say is, do we fail, and fall back within the range? If we do, that's a false breakout, and that tells me we're going to head back down to the bottom of the range and potentially break the bottom of the range. That's all I really see on the SPY. And then if we go to the upside, then we've got, way up here. It's not too far up there, actually, but right around 375 is going to be my trend line that I have going back all the way to 2009. So that's this red trend line you'll see here. Let me go to the weekly chart to show it. 2009 trend line. As I zoom in, we broke it in 2018, back tested in 2019, and if we go too much higher, right around 375 is where that trend line falls. So we'll look for signs of major resistance up there if it wants to go any higher. IWM here, let me get rid of this trend line right. Well, you can see here on the hourly, we had this uptrend line on the IWM, and we just broke it, having a little bit of a kickback, but I think we're going to head down towards 173.60. On the daily here, that is going to be, that's kind of your all-time high, it looks like. Yeah, right there is 173.60 going back to 2018. If we fail here, then that would be a false breakout as well. So watch for that. Doesn't mean we have to fail. That should hold the support, but if it can't and it doesn't, we break down, then it's possible that this was a false breakout. False breakouts are very bearish. So if when you see false breakouts, look for impulsive selling to the downside as all the longs exit their positions and the shorts pile in. Okay, so now let's get into some trade ideas. We'll start out here with gold. Just look at gold real quick. Gold continuing to show weakness. I mean, it has been in this big sideways range, and if you scroll out, you can see really it's been downtrending though. So here's your downtrend, and it just continues to walk down this trend line. Brief breakout here, which looked like the real deal, but ended up being a false breakout. And this is the kind of price action you'll see when you have a false breakout. Big impulsive selling all the way down. And now it got rejected off that trend line again, and then now it's rolling over. So I think, again, 1790, 1800, and probably not that far off. I think we'll probably get there here pretty soon. We've gone sideways for quite a while, down basically to sideways. So a break to the downside in impulsive nature might be all we see for the downside in gold in the near term. Next, we'll go to DraftKings. Where are you at? Okay, DraftKings. We've been trading this one for, I've traded it for a while. Let me get rid of this flag action here. So looks like we've got a bear flag on our hands. I don't know if it'll play out, but we do have the flagpole right here. This is a nice clean flag, and we're looking for a breakdown or a break, down out of this flag, which should set this thing up for a move. I think it's probably about right there. So we'll just mark that out. And that sits at about 25.20 on that level. So if we break down, then we will, we should see that. Now, I think it's going to happen. Here's what we got today. You can see on the hourly, they broke it to the upside of the flag in the first hour, and now the sellers are stepping in at resistance where they should be. And this is dual resistance too. It's major resistance because you can see right here, this is where we held the support previously, right around 49.35. You can see all the reactions where we held the support, broke below it briefly, but then it gapped up. And then it finally broke and gave way. And we came all the way right back up to that, overshot it just a little bit right there at 49.37 with that overshoot right there. And now they're stepping in. So I think this is probably good to the bottom of this flag. And then we look for the breakdown of the flag, and that sets in the longer trade. And also you can see if I get rid of this, we've also got negative divergence right there on the hourly, where we made a new higher high today on lower momentum. So hourly negative divergence. If we go to the daily, we had daily negative divergence back here, but that also was good for a drop, right all the way from here to here, which was about 43%. So I think that's probably played out. We don't have negative divergence again on the daily chart, but it is continuation of this divergence. You can see where it's not really diverging anymore. It's just downtrending, essentially. Momentum was diverging right here where the price was still moving higher and the momentum started to turn. And now price has started to downtrend and momentum continues to downtrend. So I don't see bullish divergence, and that's why I think we're still going down, because there's no divergence showing me that we were bullish at any point in time. Momentum started to move up here and price started to move up. There's no divergence. So to me, it looks just like a rally within what could be a downtrend. So I'm watching for that continuation. Nvidia broke down. It's not super impulsive. We'll see how this plays out. But here's this flag. So you've got this flagpole right here, and then you had this pennant right here, and then you broke down to the downside. So that means that we should get down to about right there at 475.60 or so. Again, I always step in a little bit early before we get to my profit target, but I think that is where that one looks to be heading. And the semiconductors do look weak, and that's why I'm short Qualcomm. Well, let's go to that real quick. I'll show you Qualcomm. What's kind of going on here in Qualcomm is if I go to the daily chart, you can see we've got this uptrend or this up channel, price channel, and we gapped up to the upper end of the price channel, and that's where I got short. I got short right here at 148.20, 148.80 roughly, and I added to the short yesterday when we did another tag of resistance at 153. Now you can see we keep tagging resistance, but we still continue to have negative divergence on the hourly. You can see it right there. It continues to build, so this higher prices are divergent highs. They have a high probability of failing. That's on the daily, actually. So daily negative divergence is clearly there. If you go to the hourly, we got it right there as well. So you can see here, let me remove that, and you can see on the hourly, we've got it right there. So divergences across multiple time frames. If I go to the daily, we don't have the PPO crossover yet. You can see the blue line still above the orange. Once that gets a crossover, then you're probably going to start to see price, head to the down, head down. I'm looking for price to at least head down to the bottom of this price channel. I think it's going to undercut it slightly and fill this gap. And that's, for now, that's really the only trade I'm looking for is a gap fill right about there. So if you run down anytime soon, undercut it briefly at 129.53, fill the gap. That's probably where I'll step in and cover. And then, and then we'll see what happens. I suspect if they fill the gap, they're going to recover the gap or recover this channel. And then, again, I'll have to see what happens at that point. So it's about we'll see, from where we're at now, that's about a 11% profit target. Not too bad. And again, I'd set a stop if we start to break to the upside of the channel. Well, up here, I'd stop out up here around 158.30, 158.50, something like that. Okay, rolling back to the SOXX, this is the semiconductor ETF. And you can see that, Qualcomm is obviously, to me, looks like has a bearish setup. Nvidia looks like it's short-term bearish at least. And if I go to SOXX, you can see here on the hourly chart, we had this up channel right here, and we just broke it to the downside, having a little bit of a kickback rally, but I suspect the downside, downward price action is going to continue. So we have this gap all the way down here at 324. That's the price. That would be my profit target, at least near term. From where we're at now, that's a drop of about 5%. And so I suspect the buyers will most likely step in there, and then we'll look for, the price action around that level. Let's take a look at Tesla. So Tesla obviously is getting included in the S&P 500. So there's bullish momentum around that. However, not that bullish, not as bullish as you would think. Now, we do have negative divergence, and that's what I'm pointing out is now it's not fully confirmed, and it could obviously be burned through. But as of right now, we have a new higher price right here, and that's a higher price from the previous peak, and yet on way less momentum. So this is a divergent high as of right now, and it has a higher probability of failing. So watch for that. If this fails, then this most likely was, another peak where we could see a pretty good size move to the downside. I don't know if it's going to happen because obviously if the price keeps going higher, the momentum will build and build, and then eventually you'll probably burn through the divergence. To burn through the divergence, you're basically just looking for the momentum to continue higher to where it's now above the previous peak right here. So this is basically, if we go if we keep going higher and get the momentum all the way up here, the RSI, then that would be burning through the divergence, which means this is no longer, a bearish setup, basically. It would be, it would continue to be bullish. And if Tesla breaks down, this NEO stock's probably going to go with it. It's just I think it just trades with Tesla, basically. People just plow money into these electric car makers if Tesla's going up. And we've got big negative bearish divergence on the daily. You can see it's continuing. It's clean. It looks, very good, while price has continued to make higher highs. So we continue to walk up this trend line right here, this short-term trend line, a break, an impulsive break, a definitive break of that trend line. And I think we'll get down to the major trend line down around 28.70, $30, depending on when we actually get there. So you can see we also have negative divergence on the hourly chart, and it's continues to be there. So negative divergences, I think we're just waiting for some sort of a catalyst. Might come with a breakdown in Tesla, might not. XLV, the medical sector, healthcare stocks, I took a short on this yesterday when it broke the trend line. So here's what we got going on in this one. I've got this trend line right here, and it actually probably goes all the way back to here, but whatever. It's this trend line, and we were recently just walking up this trend line right here, continuing to hold. We just broke it right there, and it was an impulsive breakdown, and it's continuing today, so that's further confirmation. We have a gap right down here at 105.75. Probably going to get a reaction, most likely a little bit before that gap. The buyers will step in, so I'll be watching for that. And if they step in there, then maybe it does a kickback rally back to the top of the trend line. If I go to the daily, though, you can see that we have, there is negative divergence right there. It's not super steep, but it basically you have a slightly higher momentum here, and prices have continued to move higher, and yet the momentum just isn't there as strong. So it is a divergent high. I think it's probably setting us up ultimately for a move down to 97 on XLV. And so I'll be watching for that. Even if we get a reaction here at this gap and move up, I still think eventually we're going to roll over down to this 97. That's what the chart tells me it wants to do. Someone asked me about volatility, UVXY, and another one is VXX. Those are the two. They're basically the same. And the thing is that the way I use volatility, these volatility ETFs, is I use them as kind of beta to my to a short trade, or to, you know, if I think the market's about to crash or come down or sell off hard, then I'll buy some volatility to add some leverage to that position. I never take large, extremely large positions in volatility, but I will add a little bit. And typically the way I do it is when I see bearish setups in the indices, before they've actually played out, and I start to see those bearish setups, I'll start to buy some volatility. And what happens is typically volatility will spike when all of a sudden when you see some sort of a market crash, or the crowd is caught off guard. The volatility will spike as everyone rushes to buy put protection as fast as they can. And so they will, in that initial rush, when everyone's buying that put protection, volatility will run higher. And after the put protection has been purchased, then typically that's the end of the move for volatility. So what I do is I sell into that surge. I sell my volatility into the surge, even though I might still hold my short positions in like triple Qs or SPY. I might still continue to short those if I haven't hit a profit target. I usually sell my volatility first before I sell my short or cover my short positions, and I do that because it's just the process of everyone getting caught off guard and rushing over to the other side and buying put protection. That's what makes volatility go higher. So that's usually what I look for, and I sell into that. As of right now, I don't see anything. We're kind of holding this area of 1272 on UVXY, but I don't see any major setups or sell signals on the SPY. If I go back to the SPY, yes, we have bearish divergence. It is big bearish divergence right here, but we haven't broken any trend lines. There's just I just don't see anything. So what I would be looking for is some sort of a signal that we're going to break. That this is going to be a bull trap and we're going to break back below 350, 350.77 or something like that. Until then, I just, I don't feel comfortable saying, okay, buy volatility, or I'm going to buy volatility, because this could, this has already held this support level twice, held it here. We could continue higher and volatility is going to continue to drift lower. So until I see a little bit more information, I'm going to hold off on, buying any volatility. Okay, and we'll wrap up with Bitcoin. I don't trade Bitcoin. I just don't like the process of buying it and selling it. It's just not fast enough for me. But there are some proxies you can do. So there's GBTC, which is a Bitcoin trust. There's another one, Overstock. I think I tracked that one. I think Block Riot Chain is another one. Usually you just need to find one that looks good, and you can typically make money. And they're Bitcoin proxies. So what Bitcoin does, these things typically will do as well. And right now, I don't see anything bearish in this thing. I see bullish momentum to the upside. I don't see any divergences really on the daily chart. So I see kind of bullish momentum, bullish price action. If I go to the hourly, we're starting to get some bearish, some divergence on the hourly right here. You can see where the momentum's starting to fail, and we continue to kind of spike higher. So these are divergent highs on the hourly, but the hourly doesn't typically set you up for the major moves. Usually I like to see that on the daily. You got an uptrend line right about there. You could tighten it up slightly, but it's right about there. So yeah, I wouldn't want to be short this thing until I saw a break of this trend line at least, and preferably negative divergence on the daily. So in order to get that, we might need to come down a little bit and then pop higher, and then put in a negative divergence when we make that move higher. So that's really what I see on GBTC. And then we can look at Overstock. This is so this one doesn't look very bullish. This is, for some reason, this company decided to leverage themselves to Bitcoin, and that's, they are a Bitcoin proxy. However, I don't see anything bullish on this stock. Yeah, we do have a little bit of, there is some bullish divergence right here on the daily. You can see it right there. Bullish divergence as we've made kind of slightly new lower lows, and it's, bullish. So on the daily, that is usually typically good for a move, a substantial move. So let's say we come down and tag this 4103 and it does it anytime soon, it might be a divergent low, and then you get a move all the way up to 85.80 or maybe even higher. So we'll watch that. This could be a bullish setup. Again, I would need to see a break, probably a break if we go to the hourly chart here. Yeah, I would probably want to wait for this 63.88 to go. Somewhere right in there. I think if you get a bullish break above there, then that will most likely be good for a move up to about 85. These are big ranges. You can see these ranges are about 25%. So this thing's pretty volatile. So I never would take a full size position, the same size position I take in something like an ExxonMobil. I would take a smaller position because you don't need as large of a position when it can move 25%. So, all right, long video, but that's all I got for this morning. If anything crazy happens, I'll try to put out an end of the market closing video, and I'm continuing to look for different trade ideas and trade setups. So if you see anything, leave it in the comments below, and I'll catch you guys on the next one.